Hi everyone, good morning. I'd like to welcome you once again. Oh, is it afternoon now? Good afternoon. I'd like to welcome you to our Smart Learning Online that is sponsored by VT Africa Holdings. And I hope you're doing great in your studies and you're following up our lessons online. And I hope you can even go back to those lessons and you know go and remind yourself about it. Yes. Just a quick one. Um, uh, don't forget that today since we have some two activities assessments to do, please just go to the website www.hellosmart.com and then sign up as a guest. You just choose any username, and your class ID number is 598751. Go to this website, www.hellosmart.com. Sign up as a guest, and you can just use any name that you want, and your class ID that is 598751. Okay, let me try also to be part of the activity. Because okay. I'm also connecting. Okay, let's do it first. Let's all connect. Let's all connect to this www.hellosmart. Yes. Then I'm almost there. I hope you are also there and join in the new class. Then it's the class number is 598751. Okay. So let's start. Okay. Remember yesterday, just to recap, just 5 minutes to recap on what we're doing from our previous lesson. Because today we're gonna do some few activities from the past paper. So yes. All right. Okay. We did few things relating to yes. Remember we did a few things relating to assets, liabilities, income, expenses, and equity, and we have already explained this. We won't repeat again. I hope you now understand. Then these are the definition examples of asset, liability, and that was the check back. We did the income. The income. What is the definition of expense on and on we go in the treatment, and also we did some few examples relating to the journals, a double entry principle. We also did it, and we made some few examples. Yes, so those were the few examples that we did, and I hope you also went through this. Yes, that's what we did. So today, we won't go to this example. Today, we took some few questions from the past. It was from the exam paper, 2016 exam paper. So we took few examples from, and I hope it will help you, because what we did is we started with those few simple basic stuff, the theory, and then we also made we did also few examples that are very easy, so that when you do exam papers, you should be able to follow up. So as I said, please go to www.hello.com, sign up as a guest, use an ID number, your class ID 5987541, because we want to do this activity here. Yes. Okay. Waiting for few. Okay, I'm already in. Don't forget, sign in hellosmart.com. Just gonna repeat that again because it will be nice for you. Okay. Please sign in. I'll just recap. Go to www.hellosmart.com, www.hellosmart.com. Sign up as a guest. I'm already in. 5987541. 59875 598751. Okay, already in. Okay, so okay, see. Okay, let's start. Start with, let's start with this one. Yes, the activity. Right, you're given here an activity to match um, merge column A and column B. You have to match these four. It is a question taken from the past paper. Then it's just an exercise, an assessment, just to recap on what we're doing. So match the two, this side and that side. And before we move to another question whereby we'll be doing it together. So just match the two. So control, just do the activity. Okay. Let me see how many students are there. All right, we'll just move on just to save time. All right. I'll just the first activity. Okay, we'll do it. Maybe I'll start with it again tomorrow. And this one, maybe we'll just try to answer it. So now it's just matching the column A and column B. Director, how do you measure up? It's a question taken from the question paper of 2016. So matching up what a director, what is a director? Is it expressed an opinion on financial statement or this other one appointed by the shareholders? So this one, okay, I'll do this. I'll just open. Yes. So let's start. Number one, director. Is the one that is appointed by shareholders. Appointed by shareholders. That's the answer. Number two, I think number two, it was the internal auditor. If you remember the question, the internal audit, I just do it quickly. You see, the one who audits inside the audit. Let's see. So that monitors control. Okay, we just summarize as we said. And control. Just be quick here. And 3. And then shareholders. I think yes, this is a part of shareholders here. Yes, shareholders. These are the owners. You want to be quick here. Owners. And the last one was the external audit. So the external auditors are the one who give what? An independent opinion. Independent. Independent. Independent opinion on financial statement. I'm gonna delete this slide so that next time when you do the activity, you should be able to answer it on your own. So let's continue. So now we want to come to this today. This is what we want to come to. So this question, it was taken. As I said, we're gonna do a question one at a time. It was taken today. The exam paper from Matric. Matric exam paper of 2016. Yes, it was a exam paper for accounting in 2016. So we'll be doing that today. Yes. So Paradise Limited, let's see our company. Paradise Limited. The information below relates to Paradise Ltd. The financial year ended on 29. This is very in the financial period. It's very important. You see. Because your calculations financial, what's happening with my financial period? Because you can get your calculations wrong if you miss out, if you mixed up the dates, you see. So that means our financial year started on the 1st, 1 March 2015. You see, this is really important. So required, please prepare the balance sheet of the statement of financial position. You see, on this financial year working. So this is our this is the information that you get from the financial activity, from the financial Sorry about that. So what we're gonna do, just to be safe, let's start to make maybe calculations on this one. Oh, sorry. Yes, on this one here. Let me see. Let me use a highlighter. Yes. Let's make some calculations on this one first. Remember, it has how many? Let's add up a slide here. All right. Let's be quick. Yes. So this is your share capital. Okay. Now, here it says you've got Paradise Limited. It has what? It has this. So it doesn't mean that these shares were issued. So we don't record 5 million shares on our statement. You see, it says is that they had these authorized shares, but now we want to see when were they issued. 3 million shares were in issue on the first 15th of, you see, if they were issued before this date, that means we don't have to input this amount on our statement of financial position. So this also falls in the date of our financial statement. So the beginning of the financial year, how many shares they were issued is 3 million for 6 million rand. That means per share it was 2. So what we're gonna do is we'll do this let's just do a table. Let's make our table number. Okay. Let's use a different color to draw our table. There will be number here, and then yeah, the number is 3 million, and for how much price per share? Yes, that is 2 rand per share. Then and in quantity, just making our own. That is no, that is our quantity there. So what we can say here is total. Yes, let's say total. So that is 6 million shares. Okay, then what is it said here that 1 million new shares were issued yes. 1 million new shares were issued on 1st December. It also falls where? Under our financial period. For how much? 5 rand. So what we're gonna do is let's go to our slide. Yes. That is 1 million shares issued for 5 rand per share Then we're gonna see 1 million times 5, that is 5 million shares. Then we are not done. Okay, then it's let me just take this thing up. 200 shares were repurchased on 20 February 2016 from a shareholder who was relocating to another capital. A payment of 770 was made on 20 February. So it also falls in our financial year. You see, it's 200 200 shares. Okay, let's do this. Repurchased. So we're gonna use what? The average. We're gonna use the average share price. Share price, that is 2.75. So how much would it be? Let's calculate. Let me use my calculator here. 200 times 2.75. That is 550. See, doing our calculations here. So I'm taking it slow so that everyone should understand. That could be fast, but I'm thinking that others, you need also to understand what we're doing here. Okay. So now the shares that you have here, it's 3,800,000 that are issued, and what's the share cap that you have? It's here, it's 10,450,000. Okay, and this amount, it goes to our this amount here. Goes right to our share capital. You see. So now for doing these calculations, you get a mark. So you get a mark for you that you have done these calculations, you really get a mark. Now let's do another one, other calculations. Also, let's do let's do this. Let's add a slide, and let's do maybe calculations for retained earnings. Retained earnings. Or maybe before this one. This one we can do it later. Let's just go straight to a balance sheet. So now remember, when you do your balance sheet, firstly, what you're going to do is, don't forget this, you're going to write the name of the company. The name of the company is, let me see, Paradise Limited. So this is what I'm going to write. Okay. Okay, let me do this. This one, I think, let me type it. That it should just appear. Yeah. We just have this one. Yes, and Paradise Limited. And this is how you write your statement. This, it's very important also statement of financial or position it as at what's the date? 29 February 2016. Excuse me. Yes. So now let's start. Mm, mm, let's use a different color to draw our thing here. Remember, we're gonna start with what? Our assets. Sorry. It's assets first. Then we're gonna write non-current asset. Asset. So under non-current asset, we've got what? Let's see. We've got fixed assets at the carrying value of 12 12,778,400. And also we've got what? How many fixed non-current assets we have? Let me highlight them. Just want to highlight this assets. Yes. Use a different color. We've got this one and this one. Let's check. We don't have any, so we've got only two current non-current assets. Okay. Yes. So now let's go and take this amount and write it. Fixed deposit. Okay, 12,000. Let's see. Fixed assets. What's the amount again? The amount is 12. It's 12. 12 to 78 400. Let's check what they say about the fixed assets. Okay. Let's check the next slide. Okay. Here we go. Okay. Fixed assets depreciation. No fixed assets were purchased or sold in the, during the financial. So the depreciation for the financial year ended was 890. So we don't have to calculate depreciation here. So what we're gonna do is we're gonna remember these assets, we record them. We like when we record them on the statement of financial position, we record the carrying value, not the cost price. Carrying value. So we're gonna say this is what we're gonna do. Minus, sorry, minus 890. So what's the total? I've got my calculator here. It's 12, 7, 8, 100 minus 8, 9, 1, 2, 3. That will give you your 11, 3, 8, 8, 400. Okay. Then, by the way, we said we've got two. Got also a fixed deposit. Okay. Let's go to fixed deposit. Okay. So let's see what the information says about fixed deposit. Okay, our fixed deposit. We haven't given any balance here. We're not given any balance, so you have to check what the notes information is saying about fixed deposit. Okay, let's check on the next slide. Okay, let me see here. Okay. My next slide, the original, see the interest paid, provision for bad debt. Okay. Interest and capital monthly. We're looking for fixed deposit. The provision for bad debt must maintain accurate interest capitalized. Right. Go to the previous slides. The paradise, okay, dividends, final dividends. Okay. Yeah, we'll get our fixed deposit soon, but let's move on. Okay. We will definitely get, I think it's somewhere here, we'll get the information regarding fixed deposit. So let's continue. Let's go to our current asset. Okay. Current asset. Right. So let's start with our let's see, with our current asset, let's start with maybe cash and cash equivalent. equivalent. Yes. Let's see our cash and cash equivalent. What is state? So our cash and cash equivalent, we will look at here. All right, bank balance, given a bank balance. So let's check what the information has to say. Dividends and tax. Okay. Let's check on the next slide. A loan was received. Okay, this is payable. Okay. Bad debt. Okay. Here we've got missing information here. Got the missing information. No, it's repaid. Okay, I think it's better for us if we break everything down here. I was trying to run through this quickly, but I think before we do this, let's break everything down. As much as we broke this thing down, so let's break everything down. So let's just break everything down. Let's go to our retained earnings and just break everything down and just, you know, take our time doing this thing. Okay, let's do our retained earning notes, retained earnings. Then after that, we're gonna put those amounts into our balance sheet. Okay. So with our retained earnings, we have here there is a balance for our retainings, which is dividends. Okay, which is after taking into account all relevant information. The net profit before tax was calculated TV 3.8. So we're going to take this 3.8, 3,800,000. Yes, 3,800,000. And remember, that is our profit before tax. Profit before tax. Okay, then after that, what we're gonna do is remember those funds used to repurchase. Remember, we repurchased those 200. We repurchased those 200,000 shares from that owner who was going out of the country for 770. That will be your 200 shares. Remember, we did that, we repurchased them. When we were doing the calculations, we used what the average. So we're gonna say 200 times 1. Yes, we're gonna add this one again. Then it will be your, let me use my calculator. What is my calculator here? That is your, okay. That will be your 220. Oh, time is gone. That will be at 2:20. That will be that those funds that were used for repurchase, and oh, I think for now we'll stop here, but we'll continue tomorrow from this question, do everything, and I'll make sure that from this page we get all the information, because I could see some of the information is missing. Make sure that we get all the information so that we continue. I'll just stop right here for now.